Hey everyone, welcome back to the Smash Property Podcast. I'm Nick V and this is Akira. In today's episode, we're going to be uncovering the differences between Brisbane and regional Queensland for property investing purposes. We're going to go through some of the market overviews. We're going to go through some of the affordability differences and at the end, some investment strategies. So if you have been thinking about investing in Queensland, this is the episode for you. But before we get there, Akira, how you doing?
I'm doing great. I'm looking forward to today's episode. I feel like we get a lot of clients talking about this. This point is very interesting. How are you doing?
I'm doing good. I'm suffering from a bit of hay fever, so if I look like I've been punched in the face.
Oh, it wasn't me. No.
No, call docs. No, I'm just kidding. No, I'm good. We've obviously, been pretty busy, very busy. All sorts of, business things going on in the background, clients and, marketing. And,
doing some upgrades as well to the house, which is exciting.
Doing some upgrades.
Over and above.
We should hopefully have a fresh podcast feel in maybe by the next one. I'm hoping. Maybe the next couple.
Some of the ordering takes time. So couple.
So there's a lot kind of juggling, but no, I'm feeling good. I think like I said in the last podcast, I was kind of a little bit down. I'm on the other side of that now and just charging towards the end of the year. We obviously announced our partnership with BMW Clubs Australia in the last week or so on social. So if you don't know, we're going to be partnering with the BMW Clubs Australia to sponsor their Nationals event in April 2025.
I am very excited about this specifically for you because it's been something that's been one of your dreams for, I think you've told me the longest time. You've been part of the BMW Club since, teenage years kind of thing?
Since the early years, early 2010s, I was doing track days with the club and, putting every cent that I kind of could get together to do these track days and I spent a lot of time admiring all the the other guys that were there and their setups and how they all did things, and now I get to actually sponsor the event, which is pretty damn cool.
That's incredible. We went there a couple of weeks ago just for one of your track days and we're like, let's make it happen. Yeah, let's do it. Let's get involved.
So there's going to be lots of cool content. Obviously it's going to be car related for the most part, but there's also going to be some other stuff that we'll share along the way.
Definitely.
Which is going to be super cool. So lots kind of happening in the background. That's probably one of the cooler things that we've got going on.
Funner things, yeah.
I mean, otherwise the deal hunting,
at the moment.
Even as of today, that's the biggest rush for me, honestly.
Getting on the phones this morning,
finding the deals. It
It
is cool. So. Lots happening and lots that we'll share with you guys across our socials. So if you haven't already, follow us on whatever platform, Facebook, LinkedIn, Instagram, TikTok, obviously YouTube as well, Spotify. We've got it all. We do it all here at SPI.
It's becoming more and more fun to get the rhythm of the social media side. So it's good.
Yeah, look, I mean, I love the podcast thing, and
I think you said 18th episode,
I think
something
this is
crazy.
17 we're creeping up to 20 episodes.
That's pretty cool.
Which is pretty damn cool. So we'll continue doing what we do. Back to the topic of today's episode, and just to recap, we're going to compare Brisbane versus regional Queensland. And I think, let me just frame this before we dive into the detail.
Okay.
Now, Brisbane and regional Queensland are not comparable markets, apples for apples. But a lot of people come to us with a specific budget in mind, and they may not be, they may actually be priced out of the Brisbane market. When we're talking specifically houses, take apartments out of this conversation just for the time being. When we're talking about houses, you may be priced out of the the Brisbane market, and you may be considering, hey, should I buy, a house in regional Queensland, or should I, still stay in the Brisbane market? Either increase my budget, save for a bit longer,
consider townhouses,
or consider the other option, the townhouses and apartments. So
definitely.
I just want to frame it's not comparable apples for apples. They're two different markets. But we're going to go through why that is.
Yes.
And what you can actually do to make a decision for yourself around, hey, actually, regional might be a consideration for me at this point, rather than trying to save for a bit longer to get into Brisbane, for example, right? So yeah, we get a lot of people asking this kind of question: where should I invest? What should I do? And hopefully for you guys watching, this might sort of help, clarify what you can kind of look at, when you're comparing a regional and a capital city. And the stuff that we're going to go through is you can apply this to any capital city.
I was just about to say that. This is all things Queensland specifically, but the principles are the same.
Perth and the regional WA market or whatever else may be. So let's firstly go through a market overview.
Yeah.
So we kind of take a helicopter view and, okay, what's happening in the Brisbane market that might give it, a strong sort of,
growth and rental demand.
Why
is it a good
what's driving it from that perspective? And then we'll go into the regional component. And the regional is a little bit different because every regional centre in Queensland has its own thing going on, but I'll explain a little bit about that.
We'll dive into that,
moving forward. So why don't you just sort of give us a bit of an overview of Brisbane at the moment in terms of itself?
Definitely. I guess in hindsight, looking at Brisbane, I think maybe 5 to 6 years ago, it was a pretty consistent, nothing was really moving. And then post-COVID, during COVID, it just popped. So there's been a lot of capital growth in Brisbane, all over, honestly, between Ipswich, Moreton Bay, Brisbane City towards Logan. Obviously, this comes down to infrastructure, things like livability up there. There's a whole bunch of factors that has contributed to this. So I think in summary, the Brisbane market, whilst it has been great for growth in the last, 4 years, I'd say, there's still a long way to go, I personally think.
Yeah, I definitely agree. I think, like with a lot of capital cities, or the major capital cities in the country, you do when we look at capital growth, we're not looking at over a 2-year period or a 1 year period.
Yeah.
We look at it over a 10, 20, 30-year period.
That's right.
And when you look at that data specifically for Brisbane, it gets consistent 8, 9, 10% growth. Capital growth. Now that's averaged over that period of time, year on year.
And there's variables, of course, in different locations and suburbs, but
it's
on
quite
average,
consistent. The growth is quite consistent. I think what we've seen just from buying properties just for ourselves, like years ago.
Actually, yeah, I was thinking about this.
And I can give a great example. I mean, I bought multiple properties in Moreton Bay region back when they were, 300 something thousand. And it's not.
It's so funny with the 3 in front of us.
Yeah, it's crazy now when I see prices up there. I'm like, why would you pay that? But that's just the way the market is. But for example, Moreton Bay, done amazingly well in terms of capital growth. Now, what I noticed when I bought these properties, they were negatively geared slightly at the time, right? And obviously, we've gone through an interest rate cycle. We've gone through a huge rental demand in Brisbane itself. And I've seen firsthand some of my properties when the lease is up for renewal.
Just flip.
The lease has gone from, I think one property as an example was $450. Then it went to $550 in one hit, right? And that's not me being a greedy landlord. That's just me putting it up to the market prices at the time. So property prices went skyrocketed. The rent kind of was a bit flat for a while, and then it just boomed in the last sort of maybe 2 and a bit years. It's just gone crazy. And then every renewal, it's just increased more and more.
100%. And I've noticed that up there as well. I mean, we do the monthly tracking of our properties, and I think further to your point, in line with rental growth, what I have noticed quite steadily every 3 to 5 months, the actual capital growth increases of the property.
Month on month.
20, 30K each month. It's incredible. So it does really line up to that average yearly growth that we are talking about for those 8, 9%.
I mean, like you said, we're doing the monthly tracking of the properties, and this year alone, this financial year, so only a couple months in, it's really like 5-10 grand every month the properties have gone
it's
up
wild.
in value. So if you're thinking about getting in the market, I mean, you don't wait. If you can do it, do it. So there's a lot going for Brisbane. I love the diverse economy. It's not solely dependent on one industry. There's multiple industries sort of upholding the economy there.
Yeah, and maybe we can get into the detail of what that is, like the
Well,
infrastructure.
I mean, yeah. So the infrastructure, and a lot of people talk about, you know, the Olympics. Is it going to make, you know, the property prices go crazy there, this and that? Look, I think if I can really simplify it down to a couple things, you're going to have, I guess, in the lead up to the Olympics, there's going to be construction, you know, workers that'll be there.
The tourism.
During the Olympics, you're obviously going to have tourism. That's going to, you know, increase the hospitality industry, which is going to have maybe a temporary impact on the economy and therefore a temporary impact on rentals, for example.
I'm with you.
But I think, you know, the legacy impact of the Olympics, I think, is what we should be kind of thinking about and getting excited about, is because all the infrastructure that goes in to the Olympics, Australia is pretty damn good at upholding and upkeeping that infrastructure and repurposing it for other activities and other events post-Olympics, right?
100%.
So you've got the Olympics that will build up the city further than what it has been or what it is now, and build it to a new standard, really.
That's right. And I think maybe just for, reference more than anything, you look at something like Olympic Park, how it gets repurposed now, all the events. In Sydney. Yeah. It's incredible how it still is utilized and kept up.
We were there last weekend.
Yeah.
And there was like multiple events going on. It didn't feel busy, but there was thousands and thousands of people there.
I guess like people are thinking, all right, well, what does this have to do with property investing? And I think just to your point, it has the impact of that legacy in those areas that
and I think creating. Like the reality of it is, right, if you've got a world-class, infrastructure and event facilities, you attract world-class events, which then attracts tourism, which then it builds up your hospitality. You need people to, you know, be there and work there, and it has a flow-on effect in the economy.
Exactly.
And ultimately trickles down into the housing market, because if you've got more people in the city, you need more people to stay. Yeah. That's the kind of crux.
And not to even mention the multi-million-dollar billion, I'm pretty sure, actually, cross-city.
The cross-river rail, yeah. And I think that's just another further way of the city really just making it, you know, more accessible.
That's right.
Lots of construction going on, i.e.
more jobs,
more people.
That's it.
So look, there's a lot happening in Brisbane. There's a lot of other cool projects which we won't.
The Star.
Yeah. I can't actually wait to go and see the Star. When we're up there next. But a huge building itself into a world-class city. Right?
That's it. Yeah.
And a true world-class city, not just the marketing material that you might see, you know, on the news or whatever. Now let's talk a little bit about regional, and I'll take this one because the regional Queensland, each region is really propped up by a different industry. Yeah. So I'm going to give you a couple examples, right? So you got Mackay, beautiful city. It is largely propped up by the mining industry. There's a huge coal mining reserve, one of the largest in the world, not far from Mackay, right?
Yeah.
So Mackay benefits from all the mining town money, right? Now, some people might go, oh, it's a mining town, this and that. I wouldn't necessarily class Mackay as a classic mining town.
Yeah.
Like, you know, that there are other parts of Queensland and WA that mining is the only thing in mining is a big thing in Mackay, but it's not the only thing, right?
That's right.
Now, Mackay, because it's largely influenced by mining, is going to be influenced to some degree by the ups and downs of the coal price, right? Global prices go up, mining demand increases, more people in the area, property prices increases, and increase in rental demand. It's simple, right? But it can happen on the flip side, right? Prices drop, demand decreases, and you get the picture.
So volatile.
It is a little more volatile than somewhere like, for example, a Rocky or a Bundy, right?
That's right.
Rocky and Bundy have a bit more of a diverse economy.
Yeah. Different
industries, and therefore they don't have that kind of boom and bust kind of cycle.
The flux. It's more just agricultural kind of based.
Yeah, it's a little bit more consistent, and it might be a little bit slower because of that reason.
That's right.
So that's why I said at the start, it's not comparable like for like, and each regional centre is not comparable like for like. But it's important if you are going into any one of these centres, Townsville, Mackay, Rocky, Bundy, Gladstone, that you understand what is driving the industry in that area.
Yeah, the economy.
It's going to influence what's going to happen with property prices.
That's it.
And all that sort of stuff.
So I think this is the benefit of having a clear understanding of where you're investing, so that, yes, property market is important to look into, all the data-driven insights. So incredibly insightful to understand, but most importantly, we're talking macro. So what are those cities about, those towns about, so that you get a clear understanding of what you can expect to see.
Yeah, no, exactly right. And I think just while you're saying that, if I'm watching this, I'm going, well, where am I going to get this information from? There's a lot of free resources out there. The Australian Bureau of Statistics is probably one of the better ones to go to.
Council websites.
Government data that's going to give you what's happening in terms of industries and growth and all that sort of thing.
Yeah.
Obviously, like you mentioned, local government websites will tell you on a, LGA level what's happening in the areas. Is there a new, such and such
hospital,
infrastructure approved or whatever's going in, to get some really accurate insights as to what's happening in those particular markets as well.
And honestly, pick up the phone, speak to property managers, those types of things,
say it
real
all the
estate.
time, like PMs, they're the go-to, they're the goats of the real estate industry. So that's I guess
high level,
a high level view on market overview, Brisbane versus regional Queensland.
So I think maybe just rounding back to property and the investing side of it, the difference between regional and Brisbane, what are the key elements that you can pick up between the two?
I guess we can kind of go like, pros and cons of, we'll start with Brisbane. Like what are the pros and cons of Brisbane, right? Now, some of the pros is that, like we mentioned at the start, you're going to get some pretty consistent capital growth potential over a longer period of time, right?
Yes.
That's obviously great because you've got a good track record there of, city performing over 10, 20, 30 years. And you can kind of look at that data and go, okay, well, that's a good indication of where it may go. Now, obviously that's not a guarantee, but it's as close as you can get to sort of getting, a bit of a foresight as to what's happening down the line.
That's it.
Brisbane, like we mentioned, it's a world city. It's close to all the things you'd want, right? It's a capital city.
It's stunning up there.
It's
the
got everything you want.
livability.
The beach is not far
Gold Coast
there. Sunshine Coast up north, Goldie down south. Like there's some, good 4-wheel drive tracks around. Like it's got something for everyone, really.
Exactly.
And it's got, huge infrastructure investment, which is always good for property prices.
Of course.
Right?
Of course.
Now, some of the cons. There's not many, but there are some. Now, number one is got a higher entry cost, right? If you're talking about getting into a house in Brisbane right now, as every week and month goes on, it just gets more and more expensive to get in, even to the affordable entry-level prices.
Outer suburbs, we're talking Logan.
Ipswich. Logan, forget about it.
Yeah.
Logan is in a whole different world now compared
from
to
what
where
it was. Yeah, it's honestly.
Ipswich is now kind of, the more affordable part of the city, right? And even then, you're talking outside of flood zone areas, 600, 650,000.
That's it.
Kind of at a minimum entry point, right? Which is pushing a lot of people's budgets already.
And then I think in line with that, then you start to understand the yield. Obviously, with it being a capital city, you're looking around the 4 to 5% types of yields up there. In comparison to Melbourne, Sydney, it's not terrible. But then,
comparable.
Yeah, exactly.
Comparable to other capital cities, it's not bad.
It's
but
not
comparable to regional, it is terrible.
It's not terrible. It's just not as good.
Well, I mean, for example, like we were working on a deal in Mackay.
Yeah.
Right. Now we're talking, 6.5% yield. An average growth of around 4% per annum.
This is the juicy part. I love this part.
That 4% is over a long term. Now, that's not a great capital growth, track record. But when you're talking about an investor that already might have multiple properties, they need to now pivot to more cash flow, more yield. They want to stay in residential property. They don't really want to diversify into commercial. Yeah. Then, hey, those regional yields then start to look a bit more appealing.
That's right.
Than capital cities.
And then I think just to your point, it also depends which regional market you're looking at, where in the market cycle they are, what types of properties you're buying, big blocks, are you going to put extra value on them, those types of things in terms 100%. Of strategy.
So good pros for Brisbane, not many cons. Now, when we look at regional Queensland, some of the pros, right? You've got a lower entry point into the housing market.
The affordability is there.
Specifically the housing market. Again, I'm leaving units and townhouses out of this for a second. So great, right? It's more affordable to get in and just get your foot in the door.
That's it.
Right? Like to your point, depending on where it is, sure, we generally have a better yield. In most cases, we've got a better yield than at Brisbane. Now, some of the cons, like I just mentioned, you generally have a lower capital growth rate, historically speaking, when you compare it to Brisbane.
That's
Now,
right.
there are some things that you can do to kind of accelerate that. You can do to kind of mitigate that risk, and maybe I'll touch on that.
We'll talk about that in strategy. Yeah.
And some of the cons, again, depending on which region you're in, it can be volatile because it's reliant on specific industries, depending on where it is, right?
That's right.
That's stuff that you've got to look at case by case, area by area. Now, some of the stuff that you can do if you go, okay, yeah, cool, I'm buying regional, but, you know, I want to accelerate that capital growth. Now, some of the stuff that is doable is finding, you know, the worst house on the best street.
The value add.
And adding that value, manufacturing the growth, right? That we talk about quite a lot.
And then I think just to that as well, with regional, I'm not going to say everywhere in regional because, you know, you look at Townsville, it's a hot market right now in comparison to a lot of other regional areas. But in terms of being able to find deals that there's not as much demand there in comparison to Brisbane. So you can often find things and try and negotiate that price to pick it up slightly into market value.
Yeah, that's where we talk about, you know, buying the old saying, buying below market value.
That's
right?
it.
It's like you.
So there's more, I guess, leg room and wiggle room to be able to try and get those deals.
So tips on buying below market value: find an ugly house that no one wants. Right? No, I'm serious. Find an ugly house that no one wants that you're willing to kind of put a bit of capital into to bring it up to a standard of the area.
Yes.
Okay. Buy an area that isn't such a hot market where you have people people competing for the one property. All right?
Yeah.
Those are kind of the two secret sauce components of finding good deals.
And once again, this comes down to strategy. We talk about this day in and day out on these podcasts, but I think it's understanding what you're trying to do, how many properties deep are you in, and then leveraging all this information to find the right type of deal for you. Yeah. Because I think, yes, it's one thing to sit here and say, buy the ugly duckling. But I mean, if you don't have the capacity for, you know, renovating that property, you're not willing to put up with it.
No, 100%.
Then go for a townhouse in Brisbane.
Yeah, 100%. I think it's a good way to put it. Like, there's no one size fits all strategy for everyone. And I think that's kind of a good segue into sort of the final component is understanding your strategy. Now, I can kind of simplify where the viewers and the audience might be at is, okay, so Brisbane is probably at the moment best suited towards those that are looking for capital growth over the long term. Right? So good for those that are, all right, I just want to buy and hold, you know, I've got time, I've got 10, 15, 20 years. I'm just going to get in the market. I'm going to find a property that doesn't need too much and just going to park my money there, basically. Yeah. So great sort of long-term wealth building play is a Brisbane market, right? Now, as I mentioned, some of the downsides, you've got to be able to hold that property because it's going to be negatively geared if you're looking at a house. Yeah. That's just the reality of it, right?
Exactly.
There are other things you can do, the granny flat, the this, the that, but from the jump, it's going to be negatively geared.
And I think exactly, like I might just detail this a little bit more. I think if you purchase now, say 5 years from now, obviously nobody has a crystal ball, but once again, those rental prices are going to increase. Rates are going to change. So that won't always be the case.
That's a good point because I think a lot of people forget that, it's negatively geared. It's not going to stay that way forever.
Yeah, right? So it's really thinking with your mind, is this a long-term thing or is it a short-term thing? Yeah. Is it that I need cash flow right now in my portfolio or is it that I just want to park my money, like you said?
Yeah. I mean, every property that we buy, we do a forecast of, okay, what does the cash flow look like now? Yeah. But what does it look like in 5 years?
Honestly, that compound effect is incredible.
The growth compounds, the cash flow increases over time, and regardless of what your interest rate does, right?
What I would say to any new investor, if you can afford to do it and, you know, you can make that sacrifice, those capital cities are always great because you're going to see good performance.
100%. You said it well. If you can afford to get into Brisbane, do it because you're not going to regret it. Now, regional, on the other hand, in terms of investment strategy, is going to be good for those that need the rental yield, those that need the cash flow now. Yeah. You know, you might have multiple properties in other areas or other states, and you might be heavily negatively geared in those other areas.
That's right.
And therefore, you know, the rental yield and the cash flow of a regional location is going to be more appealing for you. Or it just might mean that you might not have the borrowing capacity to buy in Brisbane, or buy a house in Brisbane.
That's the
and
key.
therefore a regional house and a regional property is actually going to serve you
Right now.
well. So it's a little bit more affordable entry point, makes a little bit more sense.
And then I think just to that, your deposit is, if you're not able to save to that Brisbane 650 kind of mark for a house, you'd rather get into the property market now as opposed to wait to hold the bigger deposit, build that up. Just get in somewhere.
Get in, and if you're looking to diversify, like I mentioned, you might have multiple properties already. You might, whatever it might be, you might have investments in other, in the stock market, and you don't want to have a negatively geared property, and so buying a property that is neutrally geared at worst in a regional location might actually be worthwhile.
Maybe it's like in your super fund or a trust, those types of things. So it's all about.
There's a lot of good reasons why regional would actually be a great investment strategy for some investors, not everyone, but some.
Yes.
And there's a lot of reasons why Brisbane would be a great strategy, a great play for some investors. And like we've said, and like we'll always say, there's no one size fits all here. It really is case by case. And to what you said earlier, like, what are you trying to do? What are you trying to achieve from this whole property thing?
Yeah, and I think what do the banks want to see? We've said that they, as much as everybody has this thing about the bank, like they're your best friend in this journey. You want to make sure that you're getting the right thing for your circumstance so you can continue to borrow. So there's benefits of both regional and obviously capital city, but you just have to understand what is, on the chessboard, what are you doing right now and how is it going to affect the next deal? Yeah,
and thinking, it's a good way to, thinking a couple moves ahead, because there's been countless conversations that we've had where it's, people are hemorrhaging cash from a negatively geared standpoint, and they call us and like, I want a positive cash flow property. And it's like, okay, I get what you're saying in the short term, but that is a short-term problem, and then you're going to be stuck with a property in middle of nowhere because you want positive cash flow from the jump.
Yeah, and honestly,
and
positive cash flow
serve you in the long term.
To be fair, obviously depending on where you're buying, but mining towns are probably the only types of areas
really
with that
is.
positive.
If you're looking at
and we're talking about houses.
You're looking at houses in anywhere in the country, and we're looking at the data all the time. Like, you're gonna have to buy in a actual mining town
or a really scrappy house.
And I'm never recommending that to any of our clients that are at least at the beginning of their journey, because it just does not make any sense. And there's obviously other options out there for people, but for us, we're more of the traditional conservative type of property investors. We look at what's
look at it long term, I think, not just short term, just try and flip things. And you have to have a long term mindset. And even though it might be slow and steady, at least you get to your end goal, as opposed to be, hemorrhaging cash and not being able to move forward and get stuck.
And I think I'll also just round this out, because we've had quite a few conversations recently as well with people around should I buy an existing property, or should I buy get a brand new build because I get the tax benefits and this and that, right? I think fundamentally, no one should ever be investing for tax benefits. To me, it makes absolutely no sense why you'd want to do that. Right? You invest to build your wealth. Depending on what your strategy is, maybe you want cash flow and go and do something else, but if you're looking at property as an investment, it's to build your wealth, right? Not to get some tax benefits and get a few $1,000s back at the end of the year.
And for complete clarity, yes, you get tax benefits with new builds, but you also get them in older houses too. So it's
a lot of people overlook that.
So
what we're talking about here and what we've gone through is existing properties in these locations. It's existing houses in these locations that we've spoken about.
We should put asterisks on that at the start.
And look, I'm not saying that apartments are a bad investment.
No,
I'm
definitely
not saying that townhouses are a bad investment. You've bought some townhouses over time. I've bought units over the time as well. It really depends on where you are at on your play, right?
Again,
you might not be able to get enough lending to get into a house, and therefore you might have to go with an apartment. And if you are, avoid the high-rise stuff and go with the 2 to 3 story stuff.
The little ugly red brickers.
Yeah, because they're obviously going to be a lot better from an investment standpoint moving forward.
Lower strata with those types of properties.
Lower strata, you've got no lifts, so there's none of those maintenance shit going on.
And I think that's
no
the other
pools
thing.
or anything in the block, that sort of stuff.
Yeah, you gotta be tactful with how you invest. Don't do it just to say, oh, I've got a beautiful apartment out in Brisbane overlooking, the whole city. It's got like a rooftop. Obviously, those properties are great. They look beautiful. Yeah. But I think at the end of the day, in comparison to something that's a little more conservative, the long play is what you want to be thinking of.
Yeah, correct. So, yeah, I just wanted to clarify that it doesn't mean that we don't, like apartments and houses and don't like apartments and townhouses. It's more so if you can buy a house and buy it in a capital city. If you can't, buy a house in a regional location, and if you can't, then we'll look at some other options for you around
units, townhouses,
units, etc. So
exactly.
That is a bit of a comparison of the Brisbane and regional markets. Hopefully you guys got some value out of that one. And thanks again for all the support over, I don't know, what's been several months now of the podcast going. Like I said, I think there's 17 or 18 episodes in, which is super cool. Obviously, no signs of slowing down. We're going to continue getting better at what we do. Obviously, redesigning our
little
set
studio
here over the next few weeks, which would be super cool. Like we've mentioned, we're on all of the social programs, right? LinkedIn.
I feel like the vlog is the next thing that we're doing and focusing on.
Yeah, let's talk about that. So we had, I think, 2 or 3 episodes of the vlog come out and some amazing feedback from people loving the candid sort of nature of the vlog. We haven't released an episode for a little while. That doesn't mean to say that we've forgotten about it or we're not interested in it. We definitely are.
Got a lot of clients on the books.
Yeah, we just got very busy with work. We were also, both of us were sick at different points over the last couple of weeks, which kind of held us back, but rest assured the vlog will still be coming out in all of its glory soon. Until the next episode, thanks so much for watching, guys. And if there's anything that you want us to cover in any future episodes, market comparisons, strategy, deep dives or whatever it might be, general questions, let us know in the comments or send us through a DM. Happy to get through whatever that might be. But until next time, thanks so much for watching. I appreciate your time. We'll catch you soon.